Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Started with the low time frame bearish ABC scenario, where we are looking for a zigzag to the downside in a wave A, 5-wave structure, followed by a WXY in B, which is a 3-wave structure, and now we're looking again for a 5-wave move to the downside. The most common target for wave C is between a 1 and a 1.236 trend-based fib extension taken from the high to the low of A to the high of B, sitting between 28.1k and 27.6k, which is just above a important support area, and therefore I can expect that if price would move below this low towards the downside, I don't really expect this area to hold or give any great support. I expect price to move to the blue area below, sitting between 26.8k and 27.4k. You also see that we still have a rare target of wave C, so it is completely normal for C to dip below the common target area, find support here before then potentially a move towards the upside. And currently price is bouncing on the 0.618 trend-based fib extension, which is a rare target for a wave C. Now on the chart, you see that this wave B retraced to the 0.382, which is a common target for wave B, taken from the high to the low of wave A, so that is fine. And the invalidation of this scenario would be for price to move above this level over here at 33.50, because if this is a wave C, meaning an impulse to the downside, then a potential wave 2 or any corrective structure is not allowed to take the origin of wave 1 to the downside. So that's why the invalidation is there. Now what is important, and what you may have read in the box over here, is time. So currently you see a fib time on my chart taken from the high to the low of wave A, basically comparing the time it took to develop this wave A with the time it takes to develop this wave C. You can already see that price has now passed the 1-to-1 fib time, meaning that this structure over here, since the high of B, is longer in time compared to this whole wave A. And that starts to be a problem, because if only wave 1 and wave 2 are in and we are looking for a wave 3 to the downside, then this wave C is going to be much longer compared to wave A. Now it is no problem for a wave C to end, let's say, around the 1.618 fib time, which is sitting at Sunday 6 a.m. Central East European time, or maybe a little bit after that. However, if this is only 2, we still need a 3, then you need a 4, which is usually longer than a wave 2, and then another 5. You can imagine this wave C is going to be extremely long in time compared to wave A, which is not really something you like to see. So that's why I start thinking already about other scenarios where either we move towards the upside because of time, or this move to the downside is part of a bigger impulse where we're not counting this as an ABC, but potentially as a bigger ABC, or in the medium time frame bearish scenario, this is the high of 5, therefore the high of B, and then we're going to be looking for a much bigger impulsive structure to the downside in a wave C. It is just something I have in mind at the moment, just because of time, because price and time are both related in Elliott waves. In a more bullish scenario, we are looking for a move to the upside. So over here, we're then looking for an ABC with inside wave C, a very nice 5-wave structure to the downside, where we have 1, 2, 3, sideways 4 in a WXY, and then a 5 to the downside, where wave 4 retraced to the 382. Very nice. That's a common target for a wave 4. And wave 5 hit the target, the 0.618, taken from the high to the low of 3 to the high of wave 4 with the trend-based fib extension tool. Now this means that after bouncing on support at 29k, the white box over here, we want to see impulsive structures towards the upside, because now we want to see continuation of the trend. We arrived to the upside with an impulsive structure, very clearly indeed. So now you want to see the same thing happening. You want to see continuation to the upside in impulsive structures, while at the moment it doesn't really look very impulsive on the micro time frame, but we'll get there in a second, because in this scenario, what I'm then looking for is price to move to the upside, and we still have a triple top over here, high 1, high 2, and high number 3. This is the first resistance area for price in this particular scenario. Yes, we have a small one over here between 30k and 31.1k, but this one over here is a bit more important, between 30.4 and 30.6. for maybe here a liquidity grab and then a rejection towards the downside, where we can then also potentially backtest this support resistance area that we have over here, which we find currently as resistance, right? Was support for a long period of time, now resistance. So moving up, take the liquidity, hit the resistance, move down, backtest this area for then a move towards the upside, where a second important resistance is up here around 31k, 31.1k to 31.3k. I've already shown you, but this is quite important. We are at resistance. It's a very, very simple support resistance flip. You know, trading doesn't have to be difficult with a very, with a personal trading strategy and entry requirements and all that stuff. I know many people that trade support resistance flips and are very successful if they do. And over here, if one would have taken a short, you're in profit. Very nice. Now in this scenario, or in this particular, like what you see on the chart, we are over here at resistance. You want to see this break broken if you're bullish, of course, and preferably broken, then backtest, and then a continuation to the upside, maybe some bullish CVD divergences or whatever you're looking for to potentially enter a trade. We also have as next resistance the value area low over here of this volume profile. So first we have to cross the support resistance area, then next up is the value area low. But the nice thing about range trading is, and probabilities, is that if price would enter the value area, maybe backtest the value area low and then move up, the probabilities are high to reach the value area high, which is at 30.7k. But the value area high is basically in the middle of nowhere because there's a big gap, a big inefficiency here. So then one can imagine price moving up to 31k, where we do have a little bit of structure. So that's something to look for. At the moment though, we are at resistance over here, which means it's not very bullish as long as price cannot go above this area. If we go to the micro scenarios, then this is the bullish scenario, because we are then looking for impulsive structures to the upside, right? So this has to be the first structure to the upside. Then we're looking for a three-wave correction in an ABC, where the most common target area for C has been hit very nicely between the 1 and the 1.236. Taken from the high to the low of A to the high of B, as you can see, nicely respected in confluence with the golden pocket, taken from the low to the high, for then now a continuation to the upside, which is what you want to see if you're bullish, right? You want to see impulsive structures. The problem, however, is this structure over here. If you look at this structure, there's two options for a bullish scenario. Either have an impulse, 1, 2, 3, 4, 5, or a diagonal, and by far most common is a contracting diagonal. So you have something like this, and they have a 1, 2, 3, 4, 5, then you get a wave 2, and then a 3 towards the upside. But this is an expanding diagonal if you look at the trend lines, which is much more rare and not really something you like to see. And just because this is a lot more rare, some sort of a expanding diagonal, the probabilities for the bullish scenario are automatically less, right? Like that's just a probabilities thing in Elliott waves. Now you could potentially think about a 1, 2, 1, 2, 1, 2, but that means you need to see a 5, 3, 5, 3, 5, 3 before then continuation up, and it doesn't really look like that on the lower time frames. Yeah, this is a little bit of a weird scenario here with this move towards the upside, this range to the upside. But in this particular scenario, we're looking for a bounce here and now an impulsive structure to the upside, where you're definitely going to take these highs, but you're also going to flip the resistance area that we have above price at the moment. In the bearish scenario, we are looking for more downside. So now this range over here is not bullish, it's bearish. It's a complex corrective structure, and we're now looking for a move to the downside and then a wave 1 followed by a wave 2 and potentially another wave 1, 2 before a bigger 3 to the downside. In this scenario, we were also looking for support in this area. You can see the dotted line over here, which I put on my chart yesterday with the video I made yesterday. You've seen this as well. And in the video, when price was still ranging over here, I was looking for that golden pocket area where we had some support for then a bounce towards the upside. And also, as mentioned, and I love sometimes how it goes, we were looking for a new fresh daily naked point of control to be made around this level, right? Expecting that the point of control of yesterday was not going to change anymore. We were expecting a new fresh daily naked point of control, and there you go, 29,475, a fresh daily naked point of control right there on top of the 786, which is pulled from this high to this low over here. So there's some nice confluence, and especially if price would move towards the upside and potentially create some bearish CVD divergences as well, it could be a very interesting short setup. Of course, there's no financial advice. This is just a potential scenario based on Elliott waves with some other confluences that we have. So in this particular scenario, right, we are looking for an impulsive, bigger impulsive structure to the downside, and then a 1-2, 1-2, and then you expect a big 3 to the downside, or you could expect another 1-2 before a big move to the downside. We do have important news coming up later today, so let's see how price is going to react. If we look at the CVD divergences, then more locally over here, there is some stuff going on. We have bearish CVD divergences over here, but preferably I like to see CVD divergences with actual highs and not like an in-between high, but it is something you have to at least keep in mind when you see it. So lower high on price, higher high on the CVD, target is down here. And the same actually happens for that bullish CVD divergence, which is with an in-between high, which is this one over, or low, this one over here, and not the actual low. So higher low in price, lower low on the CVD, target is then this high over here. But at the moment, there is no CVD divergences with the low or the high, like with this, with these highs over here, or with this low, nor with this low over here. So if we go to the AGGR chart, then you can see over here, very violently, the yellow line is moving towards the upside, creating bearish CVD divergences with this little range over here, as well as blue, by the way. But then also blue creates bullish CVD divergences, higher low on price, but over here you can clearly see lower low on the CVD line, right? Bullish CVD divergence. But if I zoom out, there's currently no bearish CVD with these highs over here, but there's also no bullish CVD, and bullish CVD divergences or CVD divergences in general should be taken with the actual low preferably. So not this one over here, which has a higher low and a much higher CVD. You need to take the lower low over here that started to range. One could sometimes take the in-between lows as well, for example, but in this scenario, any of the lows over here, there is no bullish CVD divergence, not with this one and not with any of the others as well. So we need a lot of patience from a CVD perspective. Then, as mentioned, we have news, 2:30 p.m. Central East European time. We have some high impact news, which can be seen by the red flags over here. So make sure you trade safe around those hours. And then finally, if we look at the probabilities of the different scenarios, then on the low time frame at the moment, just because of the range that we have moving to the upside over here, which looks expanding, the higher probability for an Elliott wave point of view, right, is towards the downside. That's just the way it is sometimes. So low time frame scenario at the moment has a higher probability. Doesn't mean it has to be an ABC. It can also be a bigger impulsive structure, right? It's just that downside is then more preferred, while on the micro, also the more bearish scenario, this one over here at the moment, based on probabilities, is the higher probability scenario. And again, it just has to do with this range towards the upside. That's also what I wrote over here. Currently, the higher probabilities are for the bearish scenarios just because of the range to the upside. Now, if price is going to move impulsively to the upside over here, volume increasing, we start to see 5-wave structures to the upside. Please keep in mind this scenario over here where we do look for more upside. So it all depends now on how price moves to the upside, because with this bullish scenario, we were looking for a bounce here, but also with the bearish scenario, we were looking for a bounce. But a wave 2 should be a 3-wave structure, while in the bullish scenario, you're now going to look for an impulsive structure. And in the bullish scenario, you want to see this being broken. Keep an eye on the support resistance area, right? So that being said, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.